In today's training, I'm going to walk you through how to model an IDGT business gift modeling strategy in Voyant. In this plan, we have a company that is owned by our client Marion, and it is an LLC as a C Corp. And then we also have a trust that is an IDGT. This is also Marion is the grantor and her beneficiary is her son Luke. Now what we're going to do first is create a what if plan so that we can present this strategy to Marion and show her the benefits of potentially doing this. So I'm going to create this what if plan and we're going to call this the IDGT business gift strategy. And we're going to create this plan. And what I'm going to do first is we're going to go into the corporation and we're going to do an ownership transfer. We're going to add the transfer and we are going to gift it to the IDGT. So we're going to do 100% of the ownership to the IDGT and we're going to transfer it all as of the plan start. So we're going to leave the 2026 as of now. And this essentially freezes the valuation of the company to the valuation at the year 2026, end of year 2026. So we're going to click done to save. And then I just want to really quickly show you in year view, if we go to corporate and we click on this, you can see Marion's ownership at the end of the year is 0% and it is now 100% in the ownership of Marion's trust. And we can see the cash value at the end of the year is 5.275 million. Now the next thing I want to do is create a promissory note for this transfer. And I want to go to our plus button here and go to debts and loans, and I want to use our promissory note option for this. And in this example, our promisee is going to be Marion, and if you ever have questions about the definitions between these two, you can always click our inline help. So the party to whom repayment is owed is the promisee, and that's going to be Marion. And the promisor is going to be our trust, so the IDGT. And then I'm going to give this a name, and this is a future promissory note. So this is something that's going to be coming into the plan in this year. And then the principal balance, I'm going to have that match that end of year balance of the gift to the trust. So 5.275 million. We're going to give this an interest rate and a payment amount. You can do this as a monthly amount or an annual amount, whichever makes sense for you. And this is going to be $20,000 monthly. And then you can enter in the gain and principal type. And again, if you have questions about what these three items here mean, you can click on our inline help, and it's just going to define how any built-in increase to the note's principal is calculated. So I'm going to change this to % and enter this in, and then I'm going to leave this as by installment. Under timing, I'm going to leave this as plan start, but if this were to begin in the future, you can click here on your timeline and set that as your start event. Under steps, you can add a step and you can change your interest rate in the future, or you could change by increasing or decreasing your payment amount in the future. And then under one-time payments, I'm going to go ahead and enter in a payoff amount in the future. So I'm going to say in 5 years time, 1, 2, 3, 4, 5, I'm going to enter in a payoff. And I'm going to give this a name here on the timeline for our promissory note. We're going to set that as a one-time payoff event, and that will just let the software know that we are just going to go ahead and pay off any remaining balance on this promissory note. And we're going to click done to save, and done to save this promissory note. And let's review what we have in here so far. So you can see that payoff is here in the plan. If you click your details button, you can see that here in maroon. And if we go into year view, you can see in our cash flow, we've got those loan payments coming into Marion's cash flow. And those are for the business. And if we go to expenses, you can see the expenses from the promissory note payments. Those are listed as expenses to the trust. If we go to investments, we can see the withdrawals happening from the trust account. And then we can see, if we go to debt, we can see the end of year balance on the promissory note. And then if we go to the trust, you can see a little bit more information about withdrawals coming out of that trust account. I think what's going to be most interesting to see is going to be on our legacy screen. So if we go to overview and legacy, let's do a comparison of these two scenarios. So I'm going to do my base plan on the left-hand side and my business gift strategy on the right-hand side. And you can see the difference between the total estate tax bills. So we've got 13.4 million on the left-hand side and 8.6 million on the right-hand side with our business gift strategy. We've got the total wealth transfer difference, and you can see what is passing to the heirs and what is passing outside of the estate, not subject to estate tax, now that the business is passing inside of the trust. So you can show the difference between these two strategies more clearly using this legacy screen. I hope that this has been helpful. If you have any questions, please do reach out to us by clicking the name of your client in the top right corner, selecting request support, entering your question into the text box, and sharing client access. Thanks for listening.